Good afternoon, Vincent. Welcome, everybody. Sorry, I'll just making sure everything's okay. Let me know if you can hear me. Hopefully you can. It's essentially the final trading week of the year. Now anybody's going to be too much in the markets next week. You are prepared to be hit with low volatility, low volumes. Won't see much going on at all next week. But good afternoon to everybody. Good afternoon, Vincent, Harmy, Wizzy. Thank you for all joining. We're going to be going through some key charts of today. We're going to be going over some interesting markets. We're going to be going over the data. You know, we like to talk about the data on the channel. So we're going to be talking a lot about the data this week because we have yet again central bank interest rate decisions. So very similar to last week where we had four central bank meetings. We have more central bank meetings coming up as well. So I feel like my keyboard has just died, which is always awesome. Oh, here we go. Right. Just gonna get the pen tool up. So let's talk about some of the data that we've had. Obviously, it's going to impact markets in various different ways. You know, we've talked a lot at the start of this week. If you watched the week ahead analysis video, we've talked a little bit about the currency strength and weakness. That's something I will go over again as well. Some charts that I am looking to get involved with this week from a currency strength and weakness position. We're also going to take a look at some of the commitment of traders and seasonals as well to kind of get us up to date with what's going on, where the hedge funds stand, where the commercials stand in the market. So let's kick it off with data, and then we'll go through each one of those. We're also going to highlight the CME Fed Watch tool as well, because we have the FOMC interest rate decision coming up this week. So what's going on in our world at the moment? Well, we've had some data drop today and yesterday. Yesterday, we had some interesting data out of China, first of all. Okay, so China retail sales was the one that everybody was kind of talking about yesterday. We see that coming in at 3%. So that's a rise of 3% for the month of November. That was a decrease, or it was down from the previous month of 4.8%. Now, this was a number that was expected to come in higher. Okay, so it was expected to come in at 5%, and it disappointed massively, considering the fact that there's been some quote unquote stimulus, you know, not aggressive stimulus, but a little bit of stimulus in China. We've also seen big sales going on in China as well. You had Singles Day and things like that, Black Friday, everything like that, and that didn't support any of the sort of consumer buying in the China market. So that's a concern. That's a concern if you're an investor of Chinese stocks, if you're an investor of the Australian dollar, okay, if you're an investor of the New Zealand dollar, okay. Why? Because these two countries rely heavily on China to do business with them. They are huge global trading partners, and if China's buying power decreases, well then so does Australia's, so does New Zealand. Now, that being said, New Zealand, I like the idea of being a buyer of, but just not yet. We've not got the technical conditions to be a buyer of the Kiwi, but big commitment of trader signal, which I'll come on to very, very shortly after I go through the rest of the data. But we have a big COT signal on that market, so I'm keeping an eye on that. But essentially, that was the start of Monday before we went on to services and manufacturing PMIs. Okay, now again, everyone was looking towards this number here, German manufacturing PMI. Why? Well, the situation in Germany isn't good at the moment. There's a lot of political unrest. There's a lack of growth in Germany. And unfortunately for the entire Eurozone, Germany is the largest economy within it. So if Germany does well, the Euro tends to do well. If Germany does poorly, the Euro does poorly. And doesn't look like that's changing anytime soon for the Euro right now. So waiting to see how this kind of maps out. Again, we have a really strong COT signal on the Euro. We also have a really strong seasonal pattern for the Euro. So again, just kind of need to wait for conditions to change. Okay, just need to wait for some conditions to change across those markets. One market that I am a fan of at the moment is Euro against the Canadian dollar. I'm actually long that market at the minute. Currently up, what is that? 90 pips or so on that move right now. So I will continue to look to try and hold that, see if that can continue to trade higher. Hello there, Ibrahim. By technical on Kiwi, do you mean to break such a... Yeah, just a change in the condition, right? So at the moment, the condition for the New Zealand dollar is very bearish, right? If we just bring up the chart, let's go over to the New Zealand US dollar. For instance, just one of the markets, it's in a downtrend, right? There's no reason here to be a technical buyer of this market. Okay, I did try and buy through this area here, which I did successfully on this little pullback once we had a break of this trend line, because I thought technically it could be a start of a move to trade up to the 0.6 handle, but then that soon faded and the market turned over again and started to push lower. So I had a very, very small win within that sort of 2-day period back towards the end of November. But since then, the market has continued to drive lower. There are a couple of conditions that I liked. You know, quite like the idea of waiting for price to come back into these lows, for instance. And I was looking for, again, nice bullish daily close. And I was looking to see if price would break that daily high. Didn't happen. Price continued to trade lower. The only place really that you could try and trade some of this potential Kiwi strength, or a place that I like it, is Aussie Kiwi. At the moment, we're starting to see really nice daily sort of bearish candlesticks there. 4-hour, nice double top, price broke, retested that area, starting to trade a little bit lower. But I am hesitant to pull the trigger through the sort of end of December, so I am being a little bit more cautious on what I pick to trade. But you know, I'd like to see it kind of confirm a close below the 50 moving average there on the 4-hour. If it kind of breaks that trend, I think then maybe it could continue down. But that's just saying that Kiwi I do quite like, but we're just gonna have to wait for some setups on those. Hello to you, Emma, welcome. Hope you are doing well. Right, so what else did we get? Not a lot. Obviously there was services PMI out of the USA, 58.5, good number there, very strong number. Flash manufacturing PMIs came in at 48.3, so bit of a mixed bag, but we did get a revision up to 59.7, but I wasn't really bothered by that data because we've got the FOMC coming up this week. Now, today has been quite an interesting day because the claimant count out of the UK, okay, so this is essentially an indicator of the unemployment rate, right? So unemployment, okay, I'm not going to fit that on there, but unemployment rate, essentially it's how many people are claiming unemployment benefits within the United Kingdom, right? Now that actually dropped from 28.2k into 0.3k, so it means less people are claiming unemployment benefits, and we also saw a revision down to minus 10.9. Now on this, pound rallied quite substantially. If we were to look at the average earnings as well, gone up to 5.2%. So what is that telling us? It means that there are more people employed, essentially, or there are, well, say employed, but less people claiming unemployment benefits. Average wages have gone up in the UK. Usually that points to a positive currency. The only problem I have with the pound at the moment is that GDP, okay, or gross domestic product, fell to minus 0.1%, or fell again 0.1% for a second consecutive month. So GDP being negative for a second consecutive month isn't great, right? Showing a lack of growth, and I feel like the UK is going to go through a lack of growth. So I am not necessarily positive pound right now. So that rally there was quite interesting to see, because I feel like that rally could fade. So we'll see what happens with that. What else have we had today? We've had some inflation data out of Canada. Not too fussed by this either. Inflation came in, CPI came in at 0%. So essentially heading lower, which is not a surprise considering the Bank of Canada are cutting interest rates. Trimmed CPI, which is more your core CPI. So that is things that don't involve volatile products like food, oil and energy, things like that, stayed at 2.7%. So still way above 2% target here for core inflation, right? Now, why has CPI gone down on the headline? Well, you probably find that food prices have gone down. We've probably found that oil prices, which have kind of stayed fairly stagnant until recently. We then had core retail sales month on month, which came in at 0.2%. So same as the previous, when the previous one was revised higher. Retail sales general 0.7%. So again, core retail sales just excludes things like automobiles, okay, which can be quite volatile in terms of the cost of goods and services. So core retail sales month on month, not really showing too much growth here for, again, in the US. If we look at sort of revision numbers as well, revisions coming in slightly higher, but still not great of where it was expected to come in at. So yeah, it's not bad, but it's not necessarily, you know, amazing stuff going on in the US as well. You know, in terms of, if you were looking at real strong consumer sentiment, you'd want your retail sales to be stronger, because that means people are going out into the economy, they're going in there, they're purchasing things, they're purchasing goods and services within the economy. So that's what we've had so far, and that's only Tuesday. That is only Tuesday. We've had a lot of data so far. Now, typically in big data weeks, I like to be a buyer of the US dollar. It's just a rule of thumb that I have. You know, when you have these long, large data weeks, the dollar does tend to outperform. We saw that last week. Are we going to see it again this week going into the end of the year? Do I like buying dollar at levels it's at? No, but you know, that's just a rule of thumb. Going into Wednesday, then we have inflation data out of the UK, and we have the federal funds rate decision, where we're expected to see a 25 basis points cut from the Federal Reserve. Now, a lot of people say because the Fed are cutting, that we should see currency values go down. And that is, again, a typical sort of rule of thumb is when a central bank cuts interest rates, you see a decrease in the currency value. However, the market likes to try and front run what's happening within the market, okay? So we saw a period of downside for the US dollar between sort of August going into the end of September. Why was that? Well, that was because there was anticipations that we were going to get further cuts from the Federal Reserve, and now they are in that cycle. So the market essentially priced that in. So what does that mean going into tomorrow's meeting? Well, if we go take a look at the Federal Reserve, not the Federal Reserve, sorry, the Fed Watch tool, this basically will, or what this does is analyzes the prices going on within bond traders, right, and the bond futures pricing, and it gives us an estimate of what bond traders are pricing in. So 18th of December, you can see that the probabilities of an ease are at 97.1%. You can see that in this bar chart here. So the likelihood of a 25 basis points cut going into tomorrow's meeting is very, very high, okay, because that's what the bond market is pricing in. When we go to January, though, there is a potential that there isn't going to be much change. Okay, so if we go back to the 18th of December here, you can see that we're expecting a cut, and you can see it says 425 to 450, so that's 4.25% and 450, right? When I go into January, you can see that there's an 81% chance of 425, 450. So what does that mean? It basically means that the market is expecting a cut in the December meeting, but is expecting a hold in the January meeting, right? So what does that do? Well, that means that the Federal Reserve, who have been cutting interest rates, right, in each meeting, are now going to consider not cutting for the next meeting and consider holding. And usually when they do that, it's because they have concerns of certain things happening again. One of those concerns is the fact that inflation could be on the rise, as inflation in the US, or at least core inflation, has been very, very sticky. Why are they concerned with inflation? Well, we have Donald Trump coming into power in January. Okay, so it's almost like we might see what's known as a hawkish cut, right, in the market. And that basically means that the Federal Reserve Chairman Jerome Powell will use language like the battle with inflation is not over yet. We also need to prepare for any kind of fiscal policy situations, which is anything to do with kind of the government. So essentially, Donald Trump's coming in and he's going to whack tariffs on other countries. Tariffs are going to whack tariffs onto the US. What's that going to do? Well, the only person it's really going to affect is the US consumer, right? And inflation will just go through the roof because it will make the cost of goods and services more expensive. Now, there is a theory that Donald Trump is going to try and keep oil prices lower, which is usually against what the guy's all about, because he has a lot of oil friends. So I assume he'd like to see those oil prices move higher. But oil's going to play a big part, and it always plays a big part in the inflation picture. Oil prices at the moment, if we go take a look at some oil prices, okay, at the moment, sticking around this kind of $70 level. But if we look at it from a daily chart, it's not gone anywhere since sort of mid-October. We've just kind of gone sideways here. So if this moves lower, then inflation is likely to come in lower. If this moves higher, then the cost of goods and services tend to go higher, because oil is used in absolutely everything. Okay, it's used in absolutely everything to produce lots of goods and services. It's used to transport those goods and services around, and usually higher oil prices are not good for inflation. Just to show you a quick sort of comparison, you can go to, let me just turn that EMA off a second. So this is the oil chart, the black line there. All we can do is hit the compare button and just type in US inflation. Let's see if that comes up, inflation. Whoops. Let's just type in inflation, see what comes up. United States inflation rate. Okay, so if I then pin that to the right hand side, you can see that, right? Okay, you can see that when oil prices start to rise, inflation starts to rise. When oil prices start to fall, inflation starts to fall. We've been at a sort of range for a good while now. Okay, we tried to break out of the range. You could argue the overall range is between this level here, which is sort of $95 down to sort of the $67 lows, right? And we've been in that range for a good while now, with minor ranges in between. But you can see here that the inflation rate has also stalled at that point and is also gone sideways. So whenever you see inflation rates coming up on the calendar, real good rule of thumb is just to come over to your oil chart and have a little look at how oil has been positioned, and that can give you a real good insight into what's going on in US inflation rates. Okay, so just a quick chart to take a note of when you're looking at that. But oil prices currently sitting within this massive range, lots of goes at the sort of $67 area. Market has rebounded numerous times from this. So, you know, usually with your technical trader, you look at that and you think, well, every time we get a bounce, you can see that the market isn't really pushing away from these levels. So you'd be looking to maybe see if there is a breakout to the downside of this market, if you were just looking at purely technicals on its own. So that's something to consider going forward. But let's go back to the CME Fed Watch tool. This is why we're still seeing that sort of compounded US dollar strength as well, because there's worries that inflation could rise, and there's worries that they're going to need to keep the interest rates higher elevated levels. If we go to the March meeting, you can see that does start to then, you know, price in a little bit of a cut towards March, but it's a 50-50 toss up as well. Going into May, you can see that there's a chance of potential no change. So market is at the moment is not really pricing much movement after this January meeting in terms of interest rates, because of the fiscal policy that's coming in from Donald Trump. So let's go have a quick look at the dollar index, where the dollar index is positioned. Then we'll go on to some commitment of trader reports, and then we'll go from there. So this is the current US dollar positioning at the moment. If we go take a look at a weekly chart here, the market is still fairly elevated. We came up into this key resistance zone that formed back in November of 2022. We rejected, we held down to these kind of lows. I expected a deeper retracement, I must admit. I was looking at the 105s, 104s as a potential dollar target for a move higher. That hasn't occurred. We had this kind of bottoming out. Market has started to trade higher again. Now, I am a little bit concerned about being a buyer of the US dollar because of where price is. Usually for me, I don't want to be buying into areas of resistance. I want to be waiting to see how price reacts. Do we get a breakout? Because then that's just a cleaner option to look for a trade. Or do we hold here? Does price start to kind of form a bit of a consolidation maybe? Or whatever, who knows? But at the moment, I'm just kind of sitting on my hands really. If you look at the daily chart's looking a bit more bullish, I would say. The reason I say that is because look at these candlesticks. That to me is showing there's a real lack of selling. Here going on the US dollar at the moment. If anything, there's hardly any selling right now. And that could be for many reasons. You know, this is the final week of trading of the year really. Not expecting too many big moves, but just look at that hold. Look at that hold on the US dollar. Not something I would particularly want to be a seller of right now in the market. So let's go have a look at some other good stuff then. So one of the things we like to look at is the commitment of trader reports. If you are unfamiliar in the commitment of trader reports, let me know in the chat. I can do a quick explanation. But guys as well, let me know in the chat, what are you guys trading at the minute? Is there a particular market that you want to take a look at? I sent out a poll yesterday. I asked you guys what you would like to see. Okay, so the poll results from yesterday, which was what are you most interested in seeing during tomorrow's live Forex analysis? We had a lot about the federal funds rate decision. That's great because we've gone over that. But all of the above was featured, you know, gold and the COT reports. So we'll go take a look at those as well. Eddie, hello, welcome. Kiwi CAD, yep, like that market. CAD yen, yeah, we'll go take a look at those. CAD yen was one that we liked last week, but it didn't quite set up. But looking at price action today, it's starting to make a little bit of a move. And also, you want to look at pound US dollar, which we'll go take a look at as well. So, what's going on from the commitment of trader reports right now? there's a lot going on right now. Two that really jump out to me is the euro. Okay, so when we take a look at the euro futures and we take a look at the commitment traders reports, we can see that we have a 100% buy signal on the euro. That doesn't mean it's a signal to go and buy it. It just means that the commercials are buying at levels that we have not seen for 36 months, 18 months, and 6 months. What does that mean? So when I come down to this area here, if I turn off the net position in there, you can see that the contracts there are at a level which we have not seen for a very long time. Okay, so the last time we saw these types of levels, okay, so where we are now, which is around about 450k of commercials buying, we had a very similar position to that in in 2023, which was this move higher in price. Okay, so this is a weekly chart, right? This is a weekly chart. So if I just grab my tool again, you can see that's from sort of the one spot ones all the way up into where's the highs there? I've done that wrong. It was the lows of 1.06s, okay, of that move there. 1.0750s all the way up into the highs, which was the 1.112s. Okay, so that's quite a decent size move within the market before we saw an eventual sell-off in price. And this is what I'm almost expecting, because the data out of the Eurozone is not great. So the euro is still very much a weak currency. What I was looking for essentially was a pullback and then a continuation of the downside move for euro. Looking at maybe coming back up into those ones or maybe just below 1.09, something like that. So those to me would be good levels to have a little look at for a continuation to the downside. At the moment, we can see that commercials are buying at levels they haven't been buying at for a while. Again, when was the last time they were doing that? In this little area here, and you can see over the weeks price rallied. So that's what I'm looking for here on euro. If we look at where price is, it is kind of in that sort of weird support, right? It's kind of broken the support here on the weekly chart, but it's not really, having any oomph to the downside. And this is where a lot of retail traders would be thinking, I'm going to pile in on shorts, I think, because they'll see the trend. They'll see that we've broken through support, now turn resistance, and they'll want to trade that to the downside. And they might be right, because the commitment to trader reports is a very poor timing tool. But what it does teach me, or what it has taught me in the past, is that the trend might be coming to an end, essentially. And that's why I'm not interested in selling euro against the US dollar right now. In fact, the market is just kind of range bound a little bit, but I wouldn't be surprised if we had one more little downside kind of push before seeing that turnaround. But if we go take a look at the technical charts for euro US dollar right now, very similar to that dollar index, right? You've got that daily just kind of consolidation of candlesticks, right? Now, one rule of thumb for me when I'm looking to kind of trade these markets, or what I like to see at least, is at least a close above the daily 50 moving average. Let me just get on. If I can get a close above the daily 50 moving average, then I'm more likely to be bullish on a market. Okay, I'm more likely to be bullish. This was where we had a bearish commitment to trader signal for euro US dollar, or there was a bullish signal on the US dollar index, which is the opposite. Price broke the 50-day moving average, and look at the move that followed. Okay, so a rule of thumb really is I want to see kind of price break that 50-day moving average, or at least try and break into new structure highs, and we haven't got that yet. So holding out a little bit on euro dollar right now, but got some potential moves there. One of my best trades came on pound Kiwi long 128, closed it for 1.11R. The currency strength meter is one of the best tools. Oh, thank you, Vincent. I appreciate that. I'm glad it's helping you, source opportunities, because that's the reason why I built it. Going on to the New Zealand dollar then as well, very, very similar, very interesting things going on in this market. If we take a look at the commercial long positions, okay, they are at significant levels. If I zoom back in time, we haven't seen commercials buying the New Zealand dollar at these levels ever, okay? And we can go back to sort of 1997 on that data. And you can see commercials are buying New Zealand dollar at levels we have never seen before, right? So that's a big jump. That's a big jump in sort of where the contracts are positioning. Does that mean we go out and we buy it tomorrow? Absolutely not. We still have to add those technical indicators in there. If we go look at what the hedge funds are doing, right? When we look at the net positioning on the hedge funds, and again, I'll just zoom back a little bit because hedge fund sentiment is very different, right? You can see that we've just broken all these lows here. So hedge funds are selling at levels that we haven't seen since late 2020, where we had that reversal in price. Okay, now it has been lower. It has been lower in the past. It has been lower. We have to make note that it has in this little area here back in 2019, where price then rallied. So it has been lower. If I open up just the short positioning, okay, you can see that again, market is moving higher. Has it been higher in the past? Yes. Okay, so there could be a little bit more downside room to go. Now, the problem we've got with Kiwi at the minute is the fact that China's not performing very well. But I think as soon as China starts flipping the script, I think Kiwi is going to be the one that really rockets higher, because we've got this huge sort of buying going on from the commercials, huge selling from the hedge funds. At some point, they're going to have to give. Now, we are at this key structure area here, sort of 0.57. But, price could still continue lower. And if it does, then we've got this major low that formed back in 2022, which could be the turning point for price. So, again, just kind of add a little bit of a rule of thumb there. Yes, the market is telling us that we shouldn't really be selling New Zealand dollar anymore. We should be potentially looking to buy it. But when we look at a technical chart, do we have the conditions to be a buyer? No. Right, the market is below the 50-day moving average. We are making lower lows, lower highs. I liked this area here, okay, because we broke the trend line. We were at support. I did buy this market. I made a small profit on price coming into the previous highs. I took my profit. I was looking for price to break higher to go into the 0.6. It didn't happen. Price reversed, market continued to move on. And that could continue. The narrative here could continue, and price could continue to push lower. Just giving you a heads up, that could still happen, okay? Now, looking at the weekly chart, like we have just done on Markets Made Clear there, we closed a very significant close below this area. We have another demand zone. Another demand zone is down towards this key area down here, okay? Down towards the 5,680s and below. So, could we get another week of downside? Absolutely. Could that then be the turning point going into the new year? Yes, it could be. We just have to wait for our conditions to be met, right? Always think about why you want to be in a particular market. Why do I want to be buying Kiwi? Well, I want to be buying Kiwi because the COT is telling me that there is aggressive buying from commercials, aggressive selling from hedge funds. That can lead to reversals. What are the conditions of the trade? What is the conditions? Is the market trading up? Is it making higher highs, higher lows, or has it changed trend? No. So we have to wait for this to be made before we can go and trade it. So waiting for that. Al, I've started new following. Thanks for your detailed analysis. Oh, thank you very much. Thank you very much. If you are new and you enjoy the content, please hit that subscribe button. Hit the like button as well if it's good information that you like. Emma, new here, learned a lot. Thank you so much. You're very welcome. Hopefully you enjoy the analysis and you stick around. So, that's exactly what commercials do, right? They buy to hedge. any kind of positioning. And typically what you would see is when a currency devalues, they will be buying because it's cheaper for them to buy it. So they are hedging international risk, the international business risk, right? And they are buying Kiwi dollars in lumps just in the future that we see Kiwi dollar at higher prices. They have a load of Kiwi that they've got and they've bought it for, you know, less essentially. But the problem is they get to a point where it gets to an extreme. King Kong's extremely buying just to hedge without any changes in price. Yeah, so like think about it, you know, the market hasn't really gone anywhere, has it? You know, it's been in this range now for the whole year, but they are still buying Kiwi at aggressive levels, and they've only really started to do that since we had this sort of bigger decline here. You know, when you go take a look at the chart, you can see that since we had this kind of downward move here, that's when they really started to get involved and buying at more aggressive levels. But yes, commercials are in the market to hedge their, you know, positions. What I mean by that is, let's say you've got a company in New Zealand and they are doing business with a company in the US, and they, in order to, you know, purchase what they need from the company within the US, they have to convert their New Zealand dollars into US dollars, essentially, or vice versa. You know, let's say the US are buying certain products, let's say milk, right? Because milk's a big commodity within New Zealand. Let's say the US are buying loads of milk from New Zealand. In order to buy that, they have to convert their US dollars into New Zealand dollars. Unfortunately, what they can't do really is, you know, go to the market and, you know, make these huge purchases. So what they have to do essentially is go through an intermediate, and an intermediate is the bank. The bank will be the intermediary between the two, and they will then put orders in the market in order for them to exchange their New Zealand dollars or their US dollars for New Zealand dollars. You know, a good way to think about commercials as well is think about gold prices, right? And think about you as a producer of gold. Or let's say that you are a jewelry maker and all you deal with is gold. If the gold prices is falling, what are you going to do? You're going to purchase more gold because it's cheaper for you to do it, and in the future you could potentially sell it for more, so you can make more on those gold purchases. That's exactly the same as it works within currencies, really. You are looking at the value of the currency and you think that the value in the future could potentially be higher. They don't know if it's going to be higher or not, but it could be potentially higher. So what do? They go and try and buy as much as it as less. So this is what's really interesting about gold positioning, because gold prices have been at all-time highs, but we didn't really see the producers selling at aggressive levels. Now, why is that? You know, we have to, you know, think about everything there in terms of who are buying it then. Like, consumers will be buying it, and maybe the prices are too high for consumers to buy that. So the demand for gold becomes less, essentially, in those conditions. So yeah, just think about it like that. Think about you as the person that is trying to be a buyer of something. Think about if you were to then produce something and sell it, you would want to buy more of it if it got cheaper. Okay, think of it like that. So that was the other COT report. The other one as well is quite interesting to me, is the NASDAQ. NASDAQ is flying at the moment. If you go and compare the NASDAQ to other stock indices, right? So first of all, let's look at the S&P 500. It's fairly stable. Last week we didn't really do anything. The week prior we made new all-time highs, but last week we didn't do anything. This week we're trading towards the lows of last week, kind of consolidating. Look at the NASDAQ. NASDAQ has taken off. Market has rallied significantly higher over the past few days. You know, if we look at this 4-hour chart here, you can see the trend is really nice. Now, why is that? Well, there is multiple reasons for that. Tech companies starting to rally again. A lot of tech companies are within the S&P 500, but some of them aren't. because of their market cap, but tech companies are doing pretty well at the moment. So this is just showing you what sectors really are doing well. Tech is another market that's doing well. Nasdaq's running away. If you look at the Dow on the opposite side, Dow is just dropping significantly, which is again very, very interesting to see. Usually these stock markets can work, you know, with each other, right? And you usually see one of them go and then the others kind of follow. Nasdaq has been flying away. S&P has been doing the opposite. Dow has really been doing it. Another one that's been performing poorly is the Russell small caps. You know, these markets could be hurt essentially. You know, if you look at the Dow and the Russell could be impacted by interest rates staying higher. So that's quite interesting. But if we go take a look at the current trader reports here, we can see that we are starting to see a little bit of a runaway movement. If I just put on the net prices of each one, we can see that hedge funds are buying at levels we haven't seen for a little while. So, you know, coming into these kind of levels here back in February. Now, again, look at the timing. The timing would have been super poor on this. You had 1, 2, 3, 4 weeks before the market formed a top and we pulled back. When you look at what the commercials are doing at the moment, they're selling Nasdaq at levels we haven't seen for a while. They've actually surpassed that kind of pullback that we had within the market. Let's have a little look at, I want to just see where the shorts and longs are positioned. Okay, so they're not shorting at sort of mega levels that we've seen in the past, but still they're shorting quite aggressively there. Again, hedge funds are buying quite aggressively, and yeah, you know, I don't blame them because usually the stock market just goes up, right? So you've got that high there back in August, okay, which are kind of similar levels to where we're trading at now, and also kind of this minor high and that minor high. So what does that tell me? It tells me that, do you want to be buying the Nasdaq right now? Right? Maybe not. So cut rates move indices higher. Yes. Yes. Well, a lot of things makes the indices move higher, to be honest. It doesn't take a lot for them to move lower. I think, you know, when you look at 2022, why was we in that sort of mini bearish pullback? Well, that was because the Federal Reserve were hiking interest rates, okay? They then finished hiking interest rates and then the market started to storm higher. Why are indices rallying this time? It's a multiple reasons why. One of the biggest reasons was probably the fact that Donald Trump got into power. You know, he got into power in November, the 5th of November. And since then, you know, that was the low in the market, right? If we go take a look at the daily chart on, the NASDAQ, right? And we go take a look at a weekly chart. Okay, that's the 5th of August there. So sorry, the low was the 5th of August. But if we go take a look at when Donald Trump took in or won the election, essentially market has just not really looked back since then. And that's because there is expectations of tax cuts coming from Donald Trump. There's also expectations of deregulation. So to me, deregulation is a scary word because it just means that people can get away with more without getting, without sort of taking responsibility for their actions, essentially, which I think is quite scary. But what does deregulation bring? Well, it means that companies can move faster. It means that they can invest quicker. It means they can probably borrow more. And if you've got that kind of washing around, then the market will tend to do well. You know, you look at 2016 when Trump came in and look at the astronomical rise he had until sort of 2020 where we had the COVID blip. But essentially, you know, the biggest thing that's kind of impacted the stock markets in recent times anyway was the Federal Reserve hiking interest rates, which was this period here. right? That's when they were hiking. So stock markets continue to rally, but you know what it will suggest to me right now is there's maybe a moment that we should pause, wait for prices to pull back, you know, and then we can get back into the market. For me, do I want to be trading Nasdaq up here? No. But like when I look at sort of levels down here, yeah, fantastic. You know, if we can try and get back into some support levels, that would be great. Now I look at the S&P 500. I'd like the S&P 500 to be back down towards the 5.8s. The Dow, I've got a support zone down towards 43,200, which I quite like. And what I was waiting for essentially was a break of 4-hour trend. We haven't had that yet, so I'm going to move my alert down to that height. And I'll keep an eye on this on a day-to-day basis. FTSE hit that resistance, turned back. So seasonal pattern this year, not been the best. Usually we get a seasonal long idea towards the end of November. That did work out technically, but December's usually a good performing month for the FTSE. That hasn't happened. Market's starting to push back a little bit. Right, let's finish up then on the currency strength and weakness, okay, and some charts, because you guys have asked me to have a look at pound, CAD yen, and Kiwi CAD. So I want to take a look at those markets for you. So what is the currency strength meter telling us? Well, for one, it's telling me that the Australian dollar is a weak currency. Okay, so let me just blow that up a little bit. It's telling me that Australian dollar is a weak currency. Okay, -5 in that reversal zone, but no real signs of any kind of upside from that yet. Kiwi is still getting weaker. Again, so that kind of goes into my narrative that yes, we've got this extreme commitment to trader report signal, which is fantastic, good, great, love it. But do we have the conditions met to be a buyer? No. The US dollar is also in a reversal zone, +5, one of the strongest currencies from last week. So technically, we want to be buying US dollars, okay, from a currency strength and weakness point of view. CAD is also gaining a little bit of strength. Now, there is a commitment to trader report signal on CAD, and it was in a reversal zone. So that is a currency that I'm keeping a very close eye on, although I think that there's a little bit more room to go. Japanese yen, strongest currency, but that is because the way I build the currency strength meter is that if price makes a new higher high, then I give the, so, you know, just to kind of give you a quick brief of what that is. You might be thinking, what am I talking about here? So let me just quickly go to a chart and I'll show you that, because what I do is I give a scoring system like this, right? Okay, so you have the euro, pound, Aussie, and so on and so forth. But essentially, you've got the currency pairs paired together. So you've got euro, pound, euro, Oz, euro, Kiwi, euro, dollar, blah, blah, blah. And I give it a scoring system. So, and I learned this from Markets Made Clear. So you can go and have a look at that yourself. I've also got videos on it myself. But let's say you've got euro, pound, right? So the way I give the scoring is, if euro pound is in an upward trend, making higher highs and higher lows, right? I give the euro a 1 and I give the pound a 0, okay? Because the euro is stronger than the pound. If it was the other way around, right? So let's say the euro versus the pound is downtrending, I would give the euro a 0, the pound a 1, saying that the pound is stronger than the euro because price is making new lows. So that's how I do the scoring, and I do that for all the currency pairs that are listed here, okay? Now, if there's a range, you just give it 0, 0, right? You just give it 0, 0. But basically what I do is I add up the scores from the horizontal and the vertical, and then I create this total number here, okay? So so basically what this is telling me on a quick view, pound is stronger than 3 currencies at the moment. Aussie is weaker than 5 currencies. Kiwi is weaker than 3 currencies. Dollar is stronger than 5 currencies. So what I'm trying to do then is create a market sort of watch list using this information. So I want to be sort of selling Australian dollars versus the US dollar, for instance, right? Why? Because that's a market that is, you know, strong against weak, so that market should move. But I then bring this into play. So this is my currency heat map. This is where I add conditions into the market. So, you know, someone asked me earlier, I think it was you, Ibrahim, about, you know, why aren't you buying New Zealand dollar then? Well, it's because the conditions haven't been met yet. So here I just take a look at the weekly close, 50 moving average, momentum, stock, daily trend, and phase. So really, for me, this week, I'm looking at selling pound US dollar, selling Aussie US dollar, selling Kiwi dollar, buying dollar CAD, buying dollar Swiss. Looking to do nothing on Aussie yen, Aussie Kiwi, because now those conditions have slightly changed. Looking to be a buyer of Euro Aussie, buyer of Euro CAD. I want to be a buyer of Euro Pound, but we haven't got the conditions yet. Okay, no conditions there yet. Potentially selling pound yen. I know somebody mentioned CAD yen, but again, so CAD yen for me, I liked. It's on the list, but the conditions were a little bit off. And the only condition that was off, really, for me to be a buyer, is the fact that if we take a look and just scroll back up, the weekly closed bullish, which isn't a huge problem, but it closed bullish. Okay, so that was a no. We are below the 50 MA, great. The momentum knows to the upside, and that means that price is moving towards the 50 moving average. I want to see it move away, but we could possibly see that this week. Stochastic was bullish as well, pointing upward. Daily trend was bearish, but we're in the phase 2. Right, so let's go take a look at CAD yen, because I know that's one that someone has asked to have a look at. So CAD yen is here. Okay, so this is what we've kind of been waiting for, right? So last Thursday we looked at this candlestick, right? And I said, I really like that candlestick. That to me is a potential to go short on. Okay, and I had a question saying, well, why don't you just go short now? And I said, well, I want to see the daily close bearish first, and then I want to see what happens the next day, because essentially what I wanted to see was price break into new lows and then form a condition where I would sell it, right? And we didn't have that. If you actually go to the hourly chart as well, one of my conditions is that I need to see, hang on 1 second, that's meant to be, where's my 200 moving average gone? Is that it? No, my 200 moving average is gone. Give me 1 second. 200. So another condition I like to see on the hourly is the 50 to be below the 200, and then I look to kind of sell the sort of trend off the back of that, right? So for instance, these conditions through here, right, you get the crossover of the averages, you then get these kind of breakdowns, right? These are the areas I then try and like to sell on. Okay, so when I look at this condition, and when we looked at it last Thursday, I said the only thing wrong with this is that we're consolidating here. So I want to see price break that consolidation, come through and trade lower. Price has since made higher highs, higher lows. Now we are turning that, right? Look at that move there, you know, breakout of all these kind of lows, which is fantastic. So ideally, nice strong daily bearish close is something I'm looking for. And then the next day I'll look to see if any of other conditions are set up to go short in this market. But yeah, I like the idea of that. The only things that kind of put me off was we had a bullish weekly close. The price was moving back towards the 50 moving average on the daily chart, and the stochastic is kind of pointing up. That's the only kind of things that I didn't really love about this market. Similar with pound yen, really. Let's go quickly over to pound yen. You know, market was eventually above the 50-day moving average, so you know that to me isn't something I want to be particularly interested in. Once it got above that 50 moving average, not really a fan of it. So you know, if we do kind of see price maybe come up into that high, that supply zone instead, you know, and we get that kind of punch in, market moves down, breaks lower, stochastic points down, then yeah, great, I'll go intraday trading that short. But for now, you know, kind of sitting on my hands here. The only market that I felt was reasonable was EuroCAD, which I'm still in long from. So this was the market that we've spoken about for the past week or so, I think. You know, I like the idea of being a buyer. So look at that daily bullish close. Okay, stochastic is bullish, right? We were above the 50. Okay, we did go back below it, but it's, you know, we were above it. And then I was just looking for changes in that trend, right? So one of those things could be the 4-hour chart. One of it could be the hourly chart. You know, you could have a look around. But this was the conditions we were looking for. You know, the market then broke out of that condition, went sideways, broke out. So this was my long position here. My stop loss was below that low. Market is moving to the upside, right? So I just try and put as many conditions in my favor as possible, right? There's the 200 moving average as well, so you can see that. And sometimes it pays to do that, right? Sometimes it pays to do that. Yes, I'll miss out on some moves sometimes, but you know, if I trade with a strategy, then I have a probability of it working out. Okay, so this was a really good market to have a little look at. You know, daily chart, if we take a look at this again. So let's just kind of sit here for a moment and say, you know, why did we want to be long this market? Okay, well, we had a euro. Okay, so euro cot signal long. We had seasonal long. Okay, what else do we have really? Well, we have euro long strength and weakness. You know, if we go take a look at that quickly, euro 0 to 1, but the prior week to that, let's go over here, the prior week to that we were at -5. Okay, when we look at euro blue, well, it's at -6 actually, and then it went up to 0 and then to 1. So we're in that reversal zone, and then price reversed, or currency strength reversed. So yeah, great. I want to be looking to be a buyer of the euro. What currency was weak? Well, it was CAD. CAD was a weak currency, right? So essentially all I'm looking to do is try and buy a stronger currency against a weaker currency. Were the conditions there? Okay, so this is an important point. Were the conditions there? Yes, the market made a higher high, higher low on the daily chart, the higher time frame. Okay, all you need to do then is wait for a pullback into support. Is everything still here? Yep, fantastic. All I need to do is wait for a change of trend and then look to try and buy that change of trend. Okay, so when you look at the hourly chart in here, market change trend, it broke out of the trend line resistance. You know, it made a higher high, higher low pattern. It then consolidated. One of my favorite trading patterns is the triangle pattern, okay, where you get this kind of push into a resistance level, a pullback, but the pullback doesn't shoot for the lows, stays above the lows, and then if it breaks, those are my favorite patterns to trade. So when I see them, I like to trade those. So that's what I'm looking for. This is probably a perfect example of what I want to see in a market. And yeah, that is continuing to push higher. You know, and you can see, I'll show you that. Okay. But guys, let me know. Did you trade this market? Let me know what your feelings are towards it. This is a market that I like the look of. I actually just need to make sure my stop's in the right place. So it needs adjusting now, really, up towards the 200 moving average. So I'm going to reduce risk on that now. But this is the trade. Okay. This is the trade in my MetaTrader platform. See, we broke that condition. This is the candlestick where I bought off of. The stop loss was below the 200 moving average there. Market has moved higher. I've just moved my stop loss to track the 200 moving average at the moment. Okay, but that's fairly close to, you know, where I want to see it go. My target is all the way up here, but I'm able to reduce my stop losses on that now. Okay, so that's fantastic. That's what I like to do. I like to move or remove as much risk as physically possible once in a position. Okay. So does that make sense? Hopefully that makes sense. But EuroCAD was the one to watch. What else have I got on the chart? Euro Aussie. I haven't looked at Euro Aussie because Euro Aussie was in a bit of a different position. But look at that move. It's still going. But we were just at this resistance level and I couldn't find the sort of value. This was last Thursday, I think. Friday, actually. So that was when the conditions were met to go long. So I think we spoke about this on Thursday, maybe. I can't remember, but we might have spoke about this on Thursday. That was the breakout of the highs. That would have been my long position here. But I didn't like the sort of the nature of the risk reward on that one. But you know, that would have been a successful trade. I haven't taken partial yet, Vincent. I haven't taken partials yet, which I probably should do. Let me have a look at. I'm up here. Yeah, I probably should take half off, really. But now we've kind of broken into that area that I'm quite happy to just let this ride. I'll see how the day closes, because there's no point closing half now and then it kind of retrace all the way back. I'll just feel like I'll let that move a little bit, see if it can continue higher and push higher first, before I bank anything on there. I'm about, how much is the risk? So I've moved my risk now. 50 pips was my risk. I'm up about 100 pips. So I'm about 2 to 1 up at the moment. So I'll probably reduce down to maybe half on the close, see where that's at on the close. I did think Euro will move further higher against the CAD. Nice, Emma. Yeah, good. But yeah, this is the game for me. The game is for me is to try and find a currency that is strong, try and find a currency that is weak, try and trade that currency to a strategy. Okay, I hope that makes sense. Euro Kiwi was another one. Someone, sorry, I missed the charts. So Ibrahim, you put here Kiwi CAD. I hope I've answered your question on this one, and I need to look at pound US dollar. So pound US dollar is on the list. So let's go and have a look at pound US dollar first, and we'll have a look at the conditions of the market. Okay, so why is pound on my list? Well, pound has moved from 4 to 3 -1, but there are some conditions around the pound which I like. Now, this one is a little bit more of a feeling rather than anything else, right? So I'm just going to put that out there. This is more of like a fundamental picture for the pound. I have a belief that the UK's growth isn't going to grow as what's expected, and I have a feeling that that's going to impact pound prices going in the future. If you look at how pound reacted on the GDP data, it wasn't good. So I feel like pound's conditioning is going to start to change. Yeah, if I look at the strength meter here, and we look at the orange line, yes, pound has been, moving higher, but we're starting to see a little bit of that give back. Does it mean it's ready to kind of go right now? Well, I've put the conditions here are met for a sell. So when we have a little look at the pound US dollar chart, I can see that we've turned bearish on the stochastic. We've broken through a daily kind of trend line support. We're below the 50-day moving average. So everything's kind of saying yes to this market move right now. I'm just waiting again for some conditions to line up. So if I look at the 4-hour here, I can see that we're in that sort of pullback phase right now. If I look at the hourly chart, we're kind of in that sort of pullback phase right now. So what do I need to wait for? Well, I need to wait for some kind of pattern to form, some kind of breakout of that pattern in order to be a seller. So market is at the moment is moving up. What do I need to see? I need to see some kind of breakout like that maybe, or some kind of breakout of these lows. That's where you can see I've got an alert here. If I saw a close below that low, I think that would be enough for me to get into this market and try and trade this short. But market could come up and test this zone first. Why? Because it was a large period of consolidation. What is consolidation? It's volume. Okay, so basically buyers and sellers were doing business here. They thought it was fair value. The buyers then gave up, sellers won, and sellers took over. So maybe if price comes here, sellers will hold that position and the market might trade lower from there. Okay, so just waiting for some kind of, breakdown here. We've got the 150 and 200 moving average in line. Again, just need to wait for some kind of catalyst here to give up, so I can take a position on that market. But it's on my list. We might not see anything yet. We might not see anything at all. Market might just take off to the upside. So, but at the moment, conditions are more bearish for me on pound, and I'm watching that one. And what conditions do you take a partial? So, I'm 2-1 up. That's fantastic. That would be an area where I would take partials. I'm just going to see how the daily chart closes. And then we'll go from there. But there's no real kind of big condition around it. I'm up 2-1, which is fantastic. That to me is a good area. But I'm shooting for like how many pips is my target from entry? 250. So I'm looking at 5-1 on that particular move. That's what I'm trying to get out of that market right now. So if I start closing partials early, then yes, it's good, but I think I'd rather try and see if it could go a little bit more before I close off that market. The conditions haven't changed here either. Sometimes when I close partial, it can be for certain reasons. So usually, like when market hits a certain target, I'll take some off and then just see if the rest goes. Maybe sometimes around key reversal zones would be that. But we've just broken the major reversal zone and price is still moving higher. So I'm fairly comfortable in that market right now. Right, the last currency pair we'll go over then. Kiwi CAD. Okay, so Kiwi CAD was on the list a couple of weeks ago to be buyers. Okay, because why? COT reports. We want to be a buyer of Kiwi. CAD is a weaker currency. The only problem I've got with Kiwi CAD at the moment is they're both weak currencies, right? We've not seen any significant changes here. If anything, CAD has started to be a bit more bullish. Kiwi's remaining a bit more bearish. So if anything, this market's either going to go lower or sideways. Now, when will those conditions change? Well, we are at a major level of support on the weekly chart. I need to see a close above the 50 MA, which we did get. Remember, we did get that. But did the market make a higher high? No. Unfortunately not. So I need to see price do this, and then I'll be a buyer of this market. So it's not done that, so I'm staying away from that. Okay then, guys, any other questions? If not, I'm going to leave it there because we've done an hour and sort of 10 minutes. My throat is killing me, so I will leave it there. Thank you. I'm not, but thank you. I appreciate that. Just trying to help you guys, show you how I see the market, see if it helps you. Talk, if anything, you guys help me, being able to talk out my process to, a live audience kind of helps me out massively. So thank you to you guys. So I'm going to leave it there. We've got one more stream coming up on Thursday, so we can see how the market's kind of played out with the FOMC situation. So we'll see what's happened there. We'll go take a look at gold as well on Thursday because I haven't got time to do that today. But thank you for everybody that joined. If you did like it, please leave it a thumbs up. I appreciate that. And subscribe if you're not subscribed yet. I hope you have a great rest of your trading week, and I will speak to you on Thursday. Thank you very much, guys. Speak to you soon.